Hi guys, how you doing? This is Rich here on behalf of Rich TV Live, and we are live. And today I wanted to talk about Delta 9. So I have to give a shout out to Upswing Trading. Upswing Trading told me about Delta 9 cannabis, and I started to do my research and do my due diligence, and I found it to be a company that I think is undervalued, underappreciated, and underexposed. Now, clearly, this entire market is getting crushed. Everything is going down. And Delta 9 cannabis has gone down too. I mean, if you look at the chart, you will see that Delta 9 has come down from $2 last year. October, what are we? We're at almost the 10th. Can we get to the 10th? Almost to the day. It was at $1.64 last year. It's gone all the way down now to 61 cents. So as an investor, you're always looking to buy low, right? So in my opinion, this is a great time to start looking at Delta 9 cannabis. Now remember, we are not licensed advisors. Always do your due diligence, always do your research before you invest in anything that we talk about here on Rich TV Live. But this is a company that I think actually has a lot of potential. The American symbol is VRNDF. And you can go to www.richtvlive.com to learn more about Delta 9 cannabis. And their symbol in Canada is DN. Now, all the technicals for not just Delta 9 cannabis, but for the whole sector are all pretty much saying sell, 100% sell, strong sell. Everything has been trending down, but the analyst rating from one analyst is a strong buy on bar chart. You can see here that the 1 month performance is down, 3 month performance is down, 1 year performance is down, but yet the company keeps having good news. For example, Delta 9 to supply cannabis to province of British Columbia. That's big news. Delta 9 enters into binding letter of intent to acquire 2 Alberta retail stores. That's big news. The company keeps putting out big news. And I believe that this is going to continue because these guys are doing quite well. Let's take a look at their investor fact sheet. Delta 9 is Manitoba's best known cannabis brand. 40% market share in Manitoba. That's big. Vertically integrated license for production, wholesale distribution, retail operations, oil production. Operates in 185,000 square foot facilities on a 47-acre site in Winnipeg, Manitoba. 297 grow pods in our facilities, with 202 approved for production by Health Canada. All of Delta 9's cannabis production and processing activities are based in retrofitted shipping containers called Delta 9 grow pods, which are modular, scalable, and stackable, allowing the company to grow vertically on multiple floors. The grow pods are hydroponic grow systems, provide a high level of control over the grow environment, providing a premium quality product. B2B pod sales are a growing part of our business. Since November 2017, the company has raised over $64.8 million to fund expansion opportunities. Now let's take a look at their revenue. So this is a company that's actually growing. The revenue in Q2 2019 was $8,886,155. In Q2 2018 was only $715,746. So we're talking about revenue growth of an increase of 1,142%. That is substantial growth in my opinion. Q1 2019 was $5,632,184, a 58% revenue growth from Q1 2019 to Q2 2019. Now, the gross profit in Q2 2019 was $2,949,180. The Q2 2018 gross profit was only $335,000, a 780% increase. I know it's difficult when you see the entire cannabis sector collapsing, falling, and heavily red to look at opportunities when they're down. But as an investor, is it not how you make money when you buy stocks when they're down? So this is, in my opinion, one of the best times to get into the cannabis sector because everything is down. But when you look at the companies, you can actually see that a lot of them are actually growing in revenue, and Delta 9 Cannabis is one of them. Adjusted EBITDA of $663,705 loss in Q2 2019, and in Q2 2018, $1.8 million loss. So you can clearly see that they are moving in the right direction. Net income of minus $1.3 million in Q2 2019, and a net income of loss of minus $2,183,000 in Q2 2018. So the losses are also shrinking. Gross margin grew by 33%. Now, in the first half of 2019, the revenue growth is spectacular. So in the first half of 2018, the revenue was $1,047,000. In the first half of 2019, the revenue was $14,518,339, a 1,286% increase. To me, that is substantial revenue growth. I like to focus on the fundamentals. Yeah, the stock price is going to tell you one story that may or may not be heavily manipulated. I like to look at the growth. I like to look at the fundamentals. This is a company that is growing exponentially. 1,286% revenue growth year over year is spectacular. Gross profit of $4,765,434 in the first half of 2019. In the first half of 2018, only $444,000. So a 796% increase. Huge increase once again. Cost of sales, $9,752,000 in the first half of 2019. In the first half of 2018, only $603,000. So there's a lot of costs associated to that growth. Adjusted EBITDA, $2.6 million in the first half of 2019, only $3.2 million loss in the first half of 2018. So everything is moving in the right direction. The losses are shrinking. The income and revenue is growing. Net income of $14,472,867 in the first half of 2019, and a loss of $4,106,769 in the first half of 2018. Gross margin has grown by 53%. Balance sheet. In the Q2 2018, the assets were $45,975,616. In Q2 2019, the total assets have grown to $55,723,864. Total liabilities in Q2 2018 was $10 million. Total liabilities in Q2 2019 is now $19,347,323. Equity in Q2 2018 was $35 million. Equity in Q2 2019 is $36 million. Working capital of $35,305,169. Q2 2018. Working capital of $36,376,541 in Q2 2019. So you can see the consolidated statement of net loss in 2019 Q2, 2019 Q1. So you can clearly see that everything is moving in the right direction. Q4 2018, Q3 2018, Q2 2018, and Q1 2018. And with the revenue growing the way they're growing, I would not be surprised to see them start turning some amazing profits in the near future. Delta 9 is a proven producer. Delta 9 uses low-risk grow pods to cultivate indoor cannabis in retrofitted shipping containers. Grow pods provide premium product pricing, 20%, low-cost production at $1.05 a gram, and reduced risk of crop failure. $1.05 a gram is pretty good considering, I mean, even at the low scale, you're going to be getting cannabis at a minimum of $4 or $5 per gram. Operations in Manitoba provide inexpensive labor, power, and warehouse space. Vertical integration. Health Canada approved to sell products in Saskatchewan and Alberta. Retail integration provides customer analytics, i.e. preferences, inventory control, and product availability. Retail operations in Winnipeg, Brandon, and Thompson with expansion opportunities in 4 provinces. B2B pod sales provide 50% gross margin. So they've got 50% growth margin. Production and product development ramp up with 300 employees. Current capacity is 5,350 kgs a year. Plans to expand to 16,700 kgs a year in 2019. So we can expect that they're going to grow by at least 200% revenue, which is spectacular. Fully funded and 60,000 kgs by 2023. Incredible growth. Through various partnerships, Delta 9 will provide high margin derivative products and cannabis infused beverages. So stay tuned, that is coming around the corner, which is going to help their bottom line and is going to help their revenue growth. Valuation. Shares trade under the symbol on the TSX under DN and on the OTCQX under the symbol VRNDF, and warrants are listed under DNWT and DN.WT.A. Stock trades at significant discount, 80% discount to Canadian LP peer average. So based on the peer average, which right now is coming down, which is a good thing, they are priced at a significant discount compared to their peers, which means they may be underappreciated, undervalued, and underexposed. The Delta 9 goal. The goal is to be recognized by customers as one of Canada's premium cannabis brands. Our primary business objectives are to expand our grow pod operation profitability and to maximize revenues and operating profit by further enhancing our position as one of Canada's only vertically integrated cannabis companies. Our strategy is centered on our disciplined focus and execution on investing in grow pod production, accelerating wholesale and retail business, expanding oil extraction operations, improving customer service, achieving a competitive cost structure, and increasing the B2B grow pod sales. You can see there is analyst coverage from Canaccord, from Kimberly Hedlund, and Mackey Research from Greg McLeish. The earnings release calendar, they did release their earnings in Q1 2019 in May 30th. They released their Q2 2019 earnings on August 28th and will be releasing their Q3, which I can't wait to see what they're going to be, on November 28th, 2019. Now, if you look at their peer comparative analysis, you can see that Aphria is at, I mean, their share price is down today, but based on when this was put together, you can see that Aphria is trading at an average EBITDA of 13.6, and they're trading at a revenue of 5.1 based on 2019 and 2.3 based on 2020. You can see Tilray trading at 401.5x EBITDA. You can see that they are trading at 17.8x revenue. You can see Organigram is trading at 9.7 times EBITDA and 6.4 times revenue. You can see the Supreme Cannabis Company trading at 17.4 EBITDA, 4.1 revenue. Aurora Cannabis is trading at 18.8 EBITDA and 15.1 revenue. CanTrust is trading at 2.3x EBITDA and 1.3x revenue. Hexo is trading at 9.9x EBITDA, 6.2 times revenue. Kronos Group, and I've told you guys about Kronos Group, they're way overvalued, way overexposed, way overpriced, trading at 43.8 times EBITDA. This is why they're going down, folks. Everybody's wondering in a panic why they're going down. Look at these numbers. How are you going to justify trading at 43 times EBITDA and 42 times revenue, which is what Kronos Group is trading at? The Green Organic Dutchman trading at 7 times EBITDA, 7.3 times EBITDA, and 7.3 times revenue. And Vivo trading at 2.3 times EBITDA, 1.8 times revenue. Delta 9 Cannabis is trading at 2.6 times EBITDA and only 1.4 times revenue. MetaPharm Labs trading at 10.5 times EBITDA and 5.5 times revenue. So based on those numbers, based on those companies, some of the biggest ones specifically in Canada, we're talking about the average Canadian companies trading at 33.3 times EBITDA in 2019, trading at 12.6 times EBITDA based on what their earnings are expected to be forecasted in 2020. And the average Canadian company is trading at 8 times revenue in 2019 and expected to trade at about 3.6 times revenue in 2020. And Delta 9 is expected to trade at 0.6 times revenue in 2020 based on their revenue growth. So based on this, Delta 9 is underappreciated, underexposed, and undervalued when you compare them to their peers. And what's happening right now in the entire sector, in my opinion, you are seeing the entire sector. Let's take a look at the whole sector for a second. You're seeing the entire sector come back to real evaluations based on EBITDA, based on profits, based on revenue. And a lot of these companies still have no revenue. Some of these companies, most of them still have no profit. Some of them have no revenue. Some of them have no profit. Some of them still don't have licenses. But look at that hit today in Canada. 8.75% down today alone. Like, this is crazy. So the entire sector is taking a huge hit today. And in my opinion, this is a good thing for the sector because a lot of these companies have been trading, if not all of them, have been trading above their pay grade. Now what's happening is revenues are going to start to consistently grow because they've been growing exponentially. And eventually the revenues are going to catch up with these ridiculous prices that really have no revenue to back them. So if you don't have any profitability to back your prices, then the prices are going to have to come down. And what this is doing, it's going to make this sector healthy for real investors to get in based on real fundamentals and real prices. In my opinion, based on that, Delta 9 is very undervalued, very underappreciated, and very underexposed. And you can see Hexo down today based on terrible news that they're not going to hit their earnings targets. The Green Organic Dutchman is down heavily today, 22%, based on their bad news. So companies are going down all over the place. And based on that, and you look at Delta 9, they're up. Everybody's down today and Delta 9 is up. What does that tell you about Delta 9? What does that tell you about Delta 9 Cannabis? A price chart that is actually green on a day where everybody else is red. What does that tell you? In my opinion, it tells me that we may have found the bottom on Delta 9 Cannabis. Yeah, they may be undervalued, underappreciated, underexposed amongst their peers, and they've been beat up for about a year, and maybe we have found the bottom. Now, let's take a look at the American index. Let's take a look at the percentage gainers. Now, there's some gainers in America. It's nice to see. And there are the people that are bleeding. But the reality, like I told you, these are companies that can't really justify where they're trading based on EBITDA, based on revenue, because most of these companies don't even have revenue. And the ones that have revenue, most of them are not profitable yet. Because they're not profitable, they are all trading above their pay grade. So they had to come down while the revenues are growing so they could start trading based on real fundamentals, which they're starting to get closer and closer and closer to real fundamentals. I mean, there are some examples of companies that are doing very well. Look at GW Pharmaceuticals. They were up 6% today, trading at $118. This is a company that's generating revenue and they have a very tight float, up 6%. Another company that is doing very well, despite the fact that the entire sector is going down, is Scott's Miracle-Gro. They're still trading over $100. They barely went down today. They barely even moved. Why? $3 billion in sales, $372 million in net income. This is where the companies need to be if they want to trade at $100. We can't have situations where Tilray is reporting $20 million in revenue a quarter and trading at $100. So the reality is Tilray had to come down to go to a reasonable price based on the real fundamentals. Okay? Scott's Miracle-Gro, in my opinion, is the example that everybody else should be chasing. $3 billion in revenue, $372 million in net income, $100 stock, 55 million shares, tight float, great company. This is the example that everybody else in this sector needs to really be looking at. Now, if we look at their 1 year growth, look at the growth of Scott's Miracle-Gro. So since January, all they've done is go up. Yeah, they might have come down a little bit, but not much. So while everybody else in the entire sector of the cannabis sector has been going down, Scott's Miracle-Gro has been going up. Why? Because they have revenue. They have profit. And their revenue is $3 billion. It's big revenue. They can justify a $102 stock price. Can the rest of these companies justify their stock price? This is really the $1 million question. Now, I really, really like Delta 9 Cannabis because in the midst of all this red in Canada and the United States today, they're one of the few that are green. Now, let's take a look at some of the highlights of Delta 9 Cannabis, because I think it's important to understand that when all the stocks are down, guys, this is the best time to buy. It really is. I know it's difficult. I know it's hard to believe. But as an investor, everybody knows you make money buying a stock when it's down. So if your favorite company right now is down, I'm not suggesting you go and buy it today or this second. But the reality is, it is the best time to buy. It's not a time to panic. It's a time to think about your plan B, your plan C, your plan D, your plan E. We're in a growing sector, in a growing industry that's only going to get bigger. And last time I looked, people are going to keep buying cannabis because you see the revenues keep growing. People are going to keep buying CBDs and people are going to keep buying hemp products. Let's learn a little bit more about Delta 9 and why they could be a huge winner. So the company was founded in 2012 and licensed by Health Canada in December 2013, making it one of Canada's oldest cannabis companies. I'm going to make this a little bigger for you guys to read. It's been around for a long time, since 2013, which is huge. Delta 9 was public in November 2017 on the TSX Venture at 65 cents a share. So it's kind of funny. They're back to their original prices of 2017. Have you seen that we just wiped out 2 years of growth in the sector? Prices are going back to the original prices of 2017. We've wiped out 2 years of growth in the sector. Meanwhile, these companies' revenues are growing. Companies are starting to become profitable. So in my opinion, this is actually a very healthy thing for the sector. Uplisted on the TSX on September 3rd, 2019 with a new symbol DN. Since November 2017, the company has raised $64.8 million, $12 million in debt, $11.8 million in convertible debt, and $41 million in equity to fund expansion opportunities. Delta 9 is one of Canada's only vertically integrated cannabis companies with licensed production, processing, distribution, and retail operations. The company currently employs close to 300 full-time employees. The company shares currently trade under the symbol DN in Canada, VRNDF in America, and warrants are listed under DN.WT and DN.WT.A. Delta 9 operates in 185,000 square feet on a 47-acre site in Winnipeg, Manitoba, and currently has 80,000 square feet of Health Canada licensed facilities. Delta 9 has exercised options to purchase its site for $12.5 million in two tranches. Tranche 1 closed in October 2018. Tranche 2 is planned to close in 2019. Canadian Western Bank has committed a $18.1 million credit facility to facilitate the purchase. The production method. All of Delta 9 cannabis production and processing activities are based in retrofitted shipping containers called Delta 9 Grow Pods. Delta 9 holds Canadian and US patents on its grow technology. The Grow Pods provide a grow platform with its modular, scalable, and stackable, allowing the company to grow vertically on multiple floors. The Grow Pods and hydroponic grow systems provide a high level of control over the grow environment, meaning high quality products. Each Grow Pod has a full retrofit cost of only $25,000, approximately $78 a square foot, and will produce over 32,000 grams of dried cannabis per year, approximately 320,000 a year. The modular nature of the Grow Pods help prevent risk of spread of any contamination within the facility, minimizing the risk of crop loss. So Delta 9 expansion plans to increase capacity to 60,000 kilograms by 2022-2023. This is the Cannabis Campus, 650,000 square feet. So you can see that they're building a massive, massive campus. Phase 1 and 2 in 2019 is 170,000 square feet, 608 grow pods, grow capacity of 16,768 kgs, processing center, planned completion is 2019. Phase 3, which will be in 2020, 2021, will be 15 buildings. Wow, huge. 480,000 square feet, 1,500 grow pods, capacity of 43,200 kgs, phased completion over 2020-2022, extraction center, each building 37,500 square feet, 100 pods, grow 2,880 kgs. See, I like what they're doing here because they're not trying to build in some type of like a 1 million square foot facility, guys. They're actually trying to maintain organized growth. And I really like that because I've been saying that my biggest fear with these big companies is they're trying to build these 1 million square foot facilities, and it's really difficult to grow in these massive facilities because when you lose a crop, you lose a huge amount of crops and money and time and human capital. And it's not easy to grow cannabis in the first place. So it's like science. So I like what they're doing here. They want to grow slow and steady, and they want to be profitable. And you've seen based on their revenue growth, the revenue growth has been phenomenal. And I believe based on their growth, based on the past, and based on where they're going, that this can continue. Future expansion plans include increase of production capacity to 60,000 kilograms by 2022. Phase 1 expansion is complete and licensed by Health Canada. Total production capacity is currently 154 grow pods, offering 49,280 square feet of production space on 2 levels. Production total annual cannabis production capacity of 4,224 kilograms of dried cannabis. Phase 2, 2019 expansion underway. Total production capacity anticipated to increase by 454 grow pods. As of May 20th, 2019, Health Canada has approved 48 new grow pods, which brings production to 202, which will add 1,150 kilograms per year of cannabis. Overall production capacity will be now 5,350 kilograms per year. Anticipated to provide an additional 145,280 square feet of production space on 2 levels. Total annual cannabis production capacity is anticipated to increase to 16,768 kilograms. Estimated capital costs of approximately $24 million, which will be funded from the current cash on hand. So they don't need to actually go out and raise any more money to be able to fund that project. Phase 3, 2020 to 2022, expansion plans. Systematic rollout of 15 modular warehouse buildings covering 480,000 square feet of production space on 2 levels. Total production capacity is anticipated to increase by 1,500 grow pods during this period. Total annual cannabis production capacity is anticipated to increase to 60,000 kilograms of dried cannabis. Construction of a 30,000 square foot in-house cannabis extraction facility. Anticipated capital costs of approximately $115 million. Wow. Delta 9 is currently reviewing its strategic options for funding these expansion costs. So they break down all of the project scope, and this is going to be done over a period of years. This is not something that they're going to go bankrupt over. I like this. This is smart. They're doing it different than what you see some of the companies that are trying to do it so quickly. And what's happening is now there's a money crunch in the market. Companies are not getting funded as easy. The prices are lower of these stocks, which makes it more difficult for them to raise large amounts of money. And because of that, you're starting to see a lot of companies are struggling. The Manitoba advantage. As Manitoba's only licensed producer, Delta 9 enjoys natural advantages and relatively inexpensive fixed and variable costs. Central geographic location and cold winters. Manitoba is a central shipping hub, meaning relatively ease in access to raw materials and decreased freight costs. Cold winters mean decreased cooling requirements for indoor grow operations. That's interesting. I never really thought about that. Cheap power. Delta 9 is currently paying 0.04 per kilowatt hour, one of the cheapest power rates in the country. Delta 9's management is currently working with Manitoba to expand its power service to facilities up to 64,000 kgs a year. This expansion is planned to be completed by mid-2020. You know, they might be interested in working with KNR, Control Energy, which might be able to help them reduce their costs even further. Cheap labor. Manitoba's cost of living is relatively inexpensive when compared to other major cannabis cities, Canadian cities, meaning cheaper labor costs for Delta 9 production operations. The labor pool is large enough to support aggressive growth without relocation. Cheap warehouse space. Delta 9 currently pays only $6.60 per square foot on leased warehouse space and has acquired competitive options to purchase all properties it leases for production operations. Oils and extraction. Winnipeg facility. Delta 9's Winnipeg facility is currently licensed for oil production, where it acquires bulk pre-formulated oils from other licensed producers and performs bottling and labeling activities. We were granted a sales license for this facility in Q3 2019. So this is just recent. Westleaf white labeling agreement. Delta 9 agreed to enter into a 1-year white labeling agreement to purchase cannabis-derived products from Westleaf's large-scale extraction facility, with a minimum purchase order of $4 million and an option to increase the amount to $16 million. Deliveries of cannabis-derived products will commence on October 1st, 2019. So they literally just started, subject to receipt of final license approval of Health Canada for Westleaf's facility. Auxly partnership. So they're also working with Auxly, which I really like Auxly. Delta 9 is collaborating with Auxly Cannabis Group's Dosecan facility in Prince Edward Island to extract raw materials supplied from Delta 9's site and provide Delta 9 with a long-term supply of high-quality cannabis extract products. Fort Garry Brewing Partnership. In early 2018, Delta 9 partnered with Fort Garry Brewing Company, Manitoba's largest craft brewer, to collaborate on cannabis-infused beverages. In July 2018, the partnership launched its first hemp-infused beer named Legal Lager. The companies plan to produce cannabis-infused beverages in late 2019, pending formal extract regulations from Health Canada. Nanosphere. Delta 9 signed a master licensing agreement in a deal that opens the Canadian market to Nanosphere's groundbreaking cannabis technology. This agreement paved the way for an entirely new form of consumption for both medical and recreational consumers of cannabis. On the recreational side, Delta 9 can now provide a healthier alternative to smoking or vaping cannabis, but that still gives you the same or better effect. It also provides, for the first time, a truly appropriate way to deliver medical cannabis with precise dosage, better bioavailability, and without essentially having to smoke your medicine. I love this. Business to business. While Delta 9's management has been very focused on execution, we have developed several value-added businesses to business offerings which provide the company with diversified revenue streams. Genetics. Delta 9 has an extensive genetic seed bank with over 70 different varieties of cannabis. Delta 9 has packaged genetics offerings from other licensed producers looking to expand their cannabis genetics. Health Canada recently provided an export permit to sell genetics to Australia, and Delta 9 has 2 sales contracts to produce there. So that's pretty cool that they're going to be producing in Australia. Grow pods. Delta 9's proprietary grow pod system have proven an attractive solution for new licensed producers looking to build out their business model. Delta 9 has shipped grow pods as far as east as southern Ontario, south as Michigan, and as far west as BC. Licensing and consulting. As a tenured licensing producer, Delta 9 has experience in all aspects of Health Canada licensing and compliance. Delta 9 provides licensing and consulting services to new and pre-licensed producers who wish to grow cannabis. I love it. Absolutely love what Delta 9's doing. As of end of Q2 2019, revenue from B2B was over $2 million. Management will continue to grow this segment over 2019. Delta 9's gross margins on B2B revenue are in excess of 50%. Very interesting business. Medical cannabis. Delta 9 currently services approximately 3,500 medical patients across Canada through direct-to-patient medical sales. The main driver for the company's patient growth has been its branded clinic in Winnipeg. Since its inception in July 2017, the Delta 9 Lifestyle Clinic has been over 2,000 patients. Delta 9's current patient base is growing at approximately 2.5% per month. That's big. That's like what, 30% a year? That's big. Given the current supply environment for recreational cannabis is providing attractive wholesale margins, management has opted to focus on the recreational market as opposed to aggressive expansion in the medical space. Over the longer term, the company will focus on pharmacy-based distribution as a driver of expansion in the medical market. Delta 9 is a preferred supplier, PharmaSave, and its network of over 650 independent pharmacies in Western Canada. Delta 9 is in the application process to receive EU GMP certification for its existing facility, which will allow for exports into the EU. That will be huge because then you're going to be making euros. That will be huge for revenue growth. Delta 9 has an existing relationship with a German pharmacy chain which has committed to purchase 40 kgs a month for import into the German market. We anticipate making first shipments internationally within the calendar year. Recreational cannabis and supply agreements. The largest driver of earnings growth for the company over 2019 will be its wholesale cannabis business. Delta 9 spent much of 2018 investing in expanded cultivation capacity, building inventory up to October 2017, and since then, October 17, and since then has focused on developing a streamlined supply chain which allows for routine deliveries to retail stores and supply partners in Manitoba. Delta 9 is approved to supply a minimum 300 kilograms of cannabis to Alberta and approximately 30 kilograms a quarter to the Saskatchewan markets. Delta 9's grow pod system allows for perpetual harvesting, meaning that there is a constant flow of supply moving through the inventory processing and approval procedures. I love that. Delta 9 is now releasing new batches for sale and making deliveries to retail stores on a weekly basis. Delta 9 is relying on the following supply contracts to be the main drivers for distribution in 2019. Province of Manitoba, 2,000 kgs a year, first shipments completed in Q3 2018. Oxley Cannabis Group, 1,000 kgs a year, first shipments completed in Q4 2018. Canopy Growth Corp, great partner to have, 1,000 kgs a year, first shipments planned for Q1 2019. Saskatchewan product listing only, Q1 2019. Alberta product listing only, Q2 2019. Management anticipates that the company will meet or exceed its minimum deliverables for the above contracts and will seek additional supply agreements as necessary over to the year to facilitate additional distribution. As of Q2 2019, Delta 9 reported that wholesale sales from recreational cannabis was 5.9 million. Retail stores. The second largest driver of growth for the cannabis. Let's see here. Thank you guys for watching here. We are live talking about Delta 9, one of the few companies that actually was green in a bloodbath of a day. Delta 9 was actually green. And I wanted to break this down for you to understand why I think that this company is underexposed, undervalued, and underappreciated. Revenue growth has been growing by literally 1,000%, and I believe it will continue to grow. The second largest driver of growth for the company will be retail store openings. Management believes that the vertical integration into retail stores will carry a number of benefits, including control over a direct-to-consumer sales force, control over in-store marketing and branding components, and capturing retail sales margins. To date, the company has been granted 4 licenses for retail stores in Manitoba. St. Vital, 3,500 square foot superstore, opened October 17, 2018. Osborne Village, 3,500 square foot character store, opened Q1 2019. Brandon, 4,500 square foot superstore, opened Q1 2019. Thompson, 2,500 square foot superstore, planned to open October 2019. Right now, expansion opportunities. Management is currently exploring growth opportunities in retail in Manitoba, Saskatchewan, Alberta, British Columbia, and Ontario. As of Q2 2019, Delta 9 reported retail sales from recreational cannabis of 6 million. So let's break down the capitalization table. So I always like to talk to you guys about shares. Tight float means the stock can go up. A lot of shares out there, a lot of dilution means that there's always going to be people selling and the stock always has a chance to go down. There's always examples of stocks with lots of shares that go up, like Apple, for example, and there's always examples of stocks with tight share structures that go down. So let's talk about it. Common type of security, common shares, number of shares outstanding, 87,863,478 shares issued and outstanding. Convertible debentures, 11,800,000 convertible debentures, which have been converted into 9,752,066 common shares. Warrants, 8,521,500 warrants. And then another group of warrants, 9,746,800 warrants. Agent warrants, 30,478. Agents warrants, 596,505. And more agent warrants, 682,276. Stock options, 2,084,197. More stock options, 593,700. More stock options, 361,500. and another round of stock options, 2,819,375. Fully diluted with all warrants, options, and convertible debentures and issued outstanding. They have 123,051,875 shares. So they break down all of this in detail. Financial highlights for Q2 2019. Record operating revenue of $8.9 million for the second quarter of 2019, up 1,142%, which I told you guys earlier, from 715,746 for the same quarter last year. Phenomenal growth. Sequential net revenues increased 58% for the second quarter of 2019 compared to 5,632,184 in Q1 2019. Adjusted EBITDA was minus 663,000, up 1.3 million or 65% compared to a loss of 1.9 million in Q1 2019. So I believe they're going to be profitable soon, folks. Stay tuned. Gross profit of 2.9 million for the second quarter of 2019, up 780% from 335,226 for the same quarter last year. Gross profit margin was 33% for Q2 2019. For financial highlights for the first half of 2019. Record operating revenues of 14.5 million, up 1,286% from 1 million for the same period last year. Gross profit of 7.8 million, up 796% from 886,135 for the same period last year. Gross profit margin was 53% from the first half of 2019. So you can see here the revenue growth from Q3 2018 of 1.2 million to Q4 2018 of 5.2 million to Q1 of 2019 of 5.6 million, and then finally Q2 of 2019 of 8.8 million. So you can see a gross profit loss and a net income loss. So they still have some work to do, which is why the stock has been going down, but I believe that they're going in the right direction. This breaks down the revenue by segment. So as of June 30th, 2019, they generated 5.8 million in wholesale cannabis revenue. Out of that, retail cannabis revenue was 5.9 million, and medical cannabis revenue was 183,000. Business to business activities, 2.2 million. Merchandise and cannabis devices, 339,000. Other, 109,000. Total net revenue of 14,518,339. Now, if we take a look at the growth. So, let's take a look at the growth here. So, operations for Q2 versus Q1 2019. So, for the 3 months ending March 30th, 2019, total grams produced was 418,901. For the 3-month period ended June 30th, 2019, total grams produced was 675,000. So they grew substantially. Now, in the first quarter of 2019, the direct production cost per gram was $1.44 per gram. It went down substantially in Q2 to $1.05 per gram. So what I see is the cost per gram going down, the amount of debt and the amount of deficit quarter over quarter going down, the amount of revenue going up, and the growth capacity going up. In my opinion, this is going in the right direction. Total cost per gram in Q1 was $1.60, and in Q2 it went to $1.21. So that was once again going in the right direction. Total grams released for sale, 185,626 in Q1, 565,599 in Q2. Huge growth. Total grams sold, recreational wholesale, 386,387 in Q1, 517,718 in Q2. So do you see how everything is growing? Total grams sold medical, 13,400, and that actually went down because they focused more on recreational, and only 9,975 in Q2, but you can see huge growth in recreational. Average selling price per gram was $7.58 in Q1. The price went down dramatically in Q2 to $5.63. So despite the fact that the price went down, their sales went up and so did their revenue. Retail unit. Total grams sold retail, 189,796 in Q1, 282,336 in Q2. Average selling price per gram in Q1, $12.84. In Q2, $12.42. So not a huge drop there. Number of transactions processed in Q1, 44,885. And number of transactions processed in Q2 almost doubled to 84,882. Average transaction size in Q1, $58.27. And in Q2, $41.46. That's the average transaction a person is buying per transaction. Unique website visitors, 180,000 in Q1 and 152,000 in Q2, which is interesting. That's one of the few things that actually went down. Operational highlights. On May 20th, 2019, the company received approval from Health Canada for an additional 48 of its proprietary grow pods, bringing its total number of grow pods approved by Health Canada to 202. The additional 48 grow pods will increase production by 1,150 kilograms per year of dried cannabis flower production, bringing the company's overall anticipated production capacity to 5,350 kilograms of dried cannabis flower per year. There are now a total of 297 grow pods within its Winnipeg production facility, otherwise known as the Delta facility. The company is continuing with its planned Phase 2 expansion of the Delta facility to increase cannabis production to 16,500 kilograms per year. Subsequent second quarter events. The following events have taken place regarding the company since June 30th, 2019. Short form prospective offering of debenture units. On July 17, 2019, the company completed a public offering of convertible debentures units of the company for gross proceeds of $11,800,000. Each debenture was sold for $1,000 per unit, carrying a coupon rate of 8.5% for a 3-year period that included one unsecured convertible debenture and 826 common share purchase warrants of the company. The convertible debentures are convertible into Delta 9 stock at $1.21, and the warrants are convertible at $1.33. The convertible debentures and warrants trade on the TSX Venture under the trading symbol DN.DB and DN.WT.A respectively. Change of trading symbol. On July 24, 2019, the trading symbol for the common shares changed from 9 to DN. The trading symbol for the warrants would have been too many characters for the TSX Venture trading system if the company maintained a 4-character symbol. The trading symbol for the company's other listed common share purchase warrants were similarly changed from 9.WT to DN.WT. So if you want to buy warrants, you can go to DN.WT. Westleaf White Labeling Agreement. On July 24, 2019, Delta 9 entered into a 1-year white labeling agreement to purchase cannabis derivative products from Westleaf's large-scale extraction and manufacturing facilities located in Calgary, Alberta. Delta 9 has agreed to purchase a minimum of 4 million of various white-labeled cannabis-derived products from Westleaf, with an option to increase such amounts to 16 million. The derivatives of cannabis-derived products from Westleaf will commence on October 1st, 2019, subject to receipt of final license approval of Health Canada for Westleaf facility. That is everything you need to know about Delta 9 Cannabis. Love to know what you guys think. If you like Delta 9, smash the like button, share the video everywhere, comment down below. I think Delta 9 cannabis, which has been beat up, is underappreciated, underexposed, and undervalued. If I take a look at their chart, let's take a look at their chart on TradingView. You can literally see a stock that's been getting beat up for literally, I always like to mark the high. So the high on November of 2017 was $3.98. That's the high. I'm going to mark that high right here. I'm going to mark the high. So the high was $3.98. Right now we're at a 52-week low. Right now we're right around a 52-week low, which I'm also going to mark. So the low is around 59 cents. The high is $3.98. I think that if you can get in at these lower levels and these prices, it will be a gift. And the way that Delta 9 is moving and the way they are growing and the way that everything is growing exponentially, I would not be surprised to see them become profitable very soon and to see the stock start rallying like everything else when the entire market resurrects. I will not be surprised to see Delta 9 cannabis go at least to $1. Okay? Now, be careful. Always consult a financial advisor. I am not a licensed advisor. Just like you guys, I'm an investor. If the stocks go down and I'm in that stock, I bleed like you guys. But as an investor that's looking for bottoms, right now, this is a great time to load up on the best cannabis companies that are clearly not going to go anywhere but up. And I believe that Delta 9 Cannabis is one of those companies. Love to know what you guys think. Comment down below. Share the video everywhere. This is Rich from Rich TV Live, and I'm out. Peace.